Well, good morning, everyone. It is Friday, November 21st. I woke up last night, checked my phone, looked at the prices, saw, it continuing to fall, hit 81,000, slept fitfully, but really, effectively got up as normal. And here I am. And it occurred to me that there are many people who are looking at their portfolios and many traders who really need to understand the why and the how when trading or investing for the long term. So I wanted to talk about a few things and make a few admissions. So the first one is I've been wrong. I thought that in the 90s we would find a bottom because the sentiment was extreme, and all it's done is get more extreme. And now we're in the 80s and it is now extreme. And I still think that we're nearer to a bottom than a top. But part of the fact of why I can say this and say it with a straight face is because I've seen it before. And part of it is I have to admit, I understand what I'm feeling. So, over a year ago, I adjusted my portfolio and said, I think this is a long term bull market. I don't know how far, how long, I don't know what will happen, etc. So, I took 2 full years of not just spending money, but basically all liquidity that I would need for 2 years. And I put it in highly liquid, basically treasury backed funds, essentially. And so, everything else for the vast majority of it is in Bitcoin, and a little bit on some other coins which have gotten hammered, and some other stocks which have done very well. So net, I am what I am. I mean, down what, 20%, because Bitcoin's down 20% in that time, give or take, as of the instant that I started doing this recording. But the reason I wanted to talk about this is because I have to admit that yesterday and today, in the pit of my stomach, is that knot of fear, that knot that says, make the pain stop, that knot that says, oh my God, I need to sell, get liquid. I still have a substantial amount of assets. How do I protect myself? What do I do? Oh my God, let's do this and let's just sell and feel better and take the loss. That is what a lot of people are thinking. But the reason I set up my portfolio the way that I did is I had an investment thesis, which I still do, which is that Bitcoin will approach gold as a store of value. It will have a lot of volatility along the way. And so I need to hold firm during those bouts of volatility when markets cascade out of control. And the fact that who know what I know, who understand and can take the analytical process to determine that Bitcoin will survive quantum, that Bitcoin will survive whatever other FUD comes out, and understand that the upward trajectory feels to me, and I may be wrong about the upward trajectory, but we won't know that for 5 years, feels to me locked in, that I don't let my own emotions destroy my wealth. That's a very important point. And the reason that I'm saying confessions of a hodler is because every single emotional part of my being by last night was screaming, sell, sell, sell. Yet not a single Bitcoin, not a single Satoshi will I sell, because I don't need to, and because my investment thesis is intact. This simple thought is why quantitative strategies and firms such as my alma mater, Two Sigma, and Renaissance Technologies, and to a degree, if you look at the way they trade, Citadel on their hedge fund side, and many others, do extraordinarily well. It's because they take advantage of people's innate fear when markets get to an extreme, because people get afraid when markets get to an extreme. They dump, you have what's called capitulation, and then all that was going to sell are done. And what happens next? Well, what happens next is people start looking around and looking for excuses to reallocate capital when it seems to firm up. It doesn't take a massive V-shaped bottom. In fact, V-shaped bottoms are rarely, there's only one example that I know of a V-shaped bottom that propelled into massive highs, and that was in 2020. And that's because the V-shaped bottom from the 9-10,000 level down to 3,000 and then back up to 9-10,000 was caused by the pandemic panic, followed by an absolute ocean of liquidity dumped on the market by the Federal Reserve and other central banks around the world. But even then, in May of 2020, when we were at the 9,000 level, basically for a month and a half, Paul Tudor Jones comes out and says Bitcoin is the fastest horse and opens up all the eyes of institutional holders and grizzled graybeards like me and say, oh, well, maybe I should give this Bitcoin thing a try. And even then, Bitcoin stayed between 9,000 and 11,000 until all the way until October before it did a damn thing. And then it rallied into November. And by the week before Thanksgiving, hit somewhere around 19,000 or so, 20,000, whatever, between 19 and 20. So it had effectively doubled in the space of a month. And we suffered on the Thanksgiving Day, the day after Thanksgiving, actually, the Thanksgiving Day massacre, a 17% drop in one day, causing all the people who had newly bought during that doubling to puke, and only the real holders and the real traders to understand how important it was. And so how important the trend was, because liquidity was continuing to flow and the market was flying. And so a week later, it had recovered the loss. And we all know that it proceeded to triple after that over the intervening 3 months for a total gain of around 6 times. Now, during that tripling, euphoria was reached. During that tripling, we saw the exact opposite of what we're at today. We saw funding rates at extraordinary levels, people willing to pay over 100% per year just to have the opportunity to go long Bitcoin. So, we haven't seen that since then, to be blunt. So this quote cycle that people talking about didn't happen. But the point that I wanted to get across and repeat it again is, if you feel that need to sell in the pit of your stomach, whenever you do, you should not. Never. Selling when you are panicking and have gripped by fear is something that will be destructive to your portfolios. So one last point. I often tell people to avoid leverage. The last time there was a fall in 2022, I had a portion of my portfolio allocated on perp leverage, and it all got flushed out. Now, thankfully, I was smart enough to understand it was a portion of my portfolio. It was more or less the portion that I would have used to buy options at other times in my life if there was no perps, and they would have expired worthless. So it wasn't that devastating, but the feeling of getting those Bitcoin liquidated was something I never want to repeat. And it would have happened again last night, because had I decided to put on a small 5-to-1 leverage, and I'm not talking 100-to-1, a 5-to-1 leverage on when I made my call at 100, it would have been wiped out last night. And that's important to understand. Meanwhile, right now, I've taken no loss. Yes, on paper it's down, and maybe it will be down. Who knows? But we're not going to know for a couple of years. And so that is something that is important for people to understand. I often use the analogy that skiing and investing are very similar. When you're skiing, your brain, when you start to feel any tiny loss of control, immediately wants to pull yourself back and slow yourself down, because that's what we're trained to do. The problem is, if you pull yourself backwards when you're skiing, you will guarantee a fall. Boom, you're done. What you need to do is throw yourself down the hill effectively and do the opposite of what your emotions are telling you to do. Investing is the same. Putting all your money to work when everyone is euphoric and screaming that it's a bull market and it's moving higher feels good for a while, but is rarely the right thing to do. Putting all your money to work when everyone is screaming is probably a better thing to do. But humans aren't really capable of that. So the important thing to do is put your money to work on averages. Don't try to pick the Pico bottom. Don't try to blast the top, and you'll be safer. So that's my personal confession for this morning. My being wrong would have liquidated me if I had used leverage. It didn't. And I hope all of you are still firm in your positions, because if you have a thesis, you should stick to it. That's all for now. Stay safe out there. I see that we're back up over 84, which I guess compared to 81 is reasons to cheer, but we shall see, because the New York Open is generally when you see another lift down, because probably a lot of ETF holders saw what happened last night and sent in their sell orders, and they're just waiting to be executed. I hope I'm wrong. I still think we're closer to the bottom than the top, but it's important not to overtrade. Take care.